Hi, and welcome to this special New Year's edition of the Macro Show. And in this episode, we're going to talk about what I got right, what I got wrong, what's coming for the Macro Show in the new year, and addressing a conspiracy theory or two about the Macro Show. I'm your host, Steven Van Metre, and before we get into all that, I want to thank you for being my fan and supporting the show. If it wasn't for you, the show wouldn't be what it is today, and I had no expectations when I started putting the show on YouTube that it would grow to become what it is and have as many of you being loyal fans and following me every week, and for that, I want to thank you. Because again, if it wasn't for you, this show wouldn't continue as it is. Now, it's obvious what I got wrong this year. Some pretty big market moves happened. And, if you would have asked me years ago that we'd be in the middle of a recession and there'd be a raging pandemic where there'd be 20 million people unemployed and people would be speculatively buying stocks due to the belief that central bank policies were actually going to work and create inflation and economic growth, I would have said you're crazy. But yet here we are, and that's exactly what's going on. Now, my expectation was around the third or fourth quarter of last year that we probably would have, or my expectation was we see that bond move play out, where we see bond prices spike, interest rates collapse, and it hasn't yet, but it's very close to happening. And, where I come from here is after going through two recessions, the dot-com bubble and the great financial crisis, I understand what insolvency events do. I understand how quickly asset prices can collapse and everything can fall apart. And little did I realize that perhaps that not only did the speculative fever was going to take over the markets, that fiscal and central bank policies were going to, in forbearances, were going to push this off a little bit. Now, the belief is, of course, well, all these things are going to fix everything. The economy is going to go back to normal. Everyone's going to go back to work, and it's going to be great. That's just not how it's actually going to play out. Insolvency events aren't fixed by central bank interventions. They can't be fixed. And so that is still yet to come, and I expect we'll see beginnings of that in 2021 as central bank policies run out of steam and people stop paying on their loans. So as I mentioned, I understand how late cycle bull markets end. I've lived through them. And, it ends with a massive amount of wealth destruction. The opportunity for investors isn't buying high and selling higher, although there's some people that do that. But in my life, I have never met anyone that's got rich buying high and selling higher. I've met quite a few people who've gotten rich by buying low when no one else is buying because they had cash or they had assets that they could convert to cash because they appreciate it. Hence why I refer to myself as the bond king, because I know that bond prices are going to go way up during the insolvency event and asset prices are going to go way down, giving me and my clients a rare opportunity to come in and buy risk assets at a massive, massive discount. These opportunities don't come often in your life. They'll happen a few times. And if you're ready and you get them, it's great. But again, the challenge is the more money you have, the older you get, the harder it is to chase these markets higher. Valuations are off the charts. They just don't make any sense. And you look at the economic data from a macro perspective and you say, you know what? This data isn't good and it's getting worse. And that's the challenge with macro. And macro gets a lot of flack because at the end of market cycles or toward the end, you see the economic data going down and yet you see the speculative fever in the market. And because you can go back in history and say, I know how this plays out, but yet the speculative fever can go on longer than most people expect, but it always ends the same. All the people who think they're getting rich now will find out just how fast markets can sell off and evaporate well. So what's coming for next year? So what did I get right? You probably say, well, you didn't get much. Well, I understand. I've seen many of the comments and emails and posts on Twitter, and I do appreciate everyone that points out, that I'm wrong. And there's no money manager or investor that's always right. That doesn't exist. Even the best people go through phases where they are wrong. And macro does that. It's often wrong at the end of markets, but when the decline happens, when the crash happens, and from the bottom up, macro really does well. Now, I've sought to fix that problem. And I've created something, if you've watched the Sunday night chart shows, I've been talking about momentum. And for several years now, I've been working on and off on my momentum formulas. And the goal for me was to develop a comprehensive program that would scan any number of ETFs, stocks, mutual funds, whatever I was looking for, run all my momentum screens through it, and on a daily basis give me, buys, sells, allocation weightings for my portfolio so I could use this for my macro clients. Well, it's done. And I want to show you, just give you an idea of what I built, because I think what you're hearing about me being wrong is going to go to me being right quite often. So I want to give you a little preview of what this is. Now, this is not going to be publicly available, although I want you to see it, and then I want to share with you where I think this is going. So what I did is I put together, and it's deliberately zoomed out so you can kind of see this program pulls in any number of ETFs, mutual funds, securities, runs all kinds of different momentum screens against it, and looks at a bunch of different data and provides on a daily basis buy and sell signals and a weighting algorithm for me. And I think this thing is really, really cool. And I actually think it's potentially marketable. And so I reached out to a friend of mine who does a lot of internet marketing, and I said, take a look at this. I want you to see it. And he says, hey, I think you've got something here. Because what's different about what I built here is it's all based on formulas and looking at momentum. Because what we know is momentum leads price. And momentum, in a weird way, also is a bit of technical analysis. If you really understand how momentum is, it kind of brings the best of both price and technical analysis together. And so I said, the hard part about building this out is I don't know how to build out a website to take payments. I don't know how to do any of the back-end stuff. And he said, building the website's not that hard. Finding some programmers that can take the data and manipulate it isn't that hard. Because what's powerful about this program that I built is you can take momentum at different time scales, different intervals, and you can adjust it across any security you want. And you could use it for trading, for options, for long-term investing, and it would generate, again, buys and sells, and depending on what it needed to do, it could even give weighting recommendations. So imagine this. Imagine being able to go in and put in all of your 401k choices into a program and have it email you when you should make a change, a buy or a sell. Imagine being able to go in and put your favorite ETFs and individually customize what it's being screened for and sending you alerts when you should make changes to, again, buys or sells. Imagine being in a money manager at an RIA level and putting in perhaps a couple hundred different securities, and on a daily basis have it screening all of them and recommending portfolio allocation for your clients. It has the potential to be really powerful. I've even reached out to Morningstar, and they've expressed strong interest in partnering with the program. Of course, I have to pay them. But what's powerful about Morningstar as a partner is Morningstar's database covers every listed stock, ETF, and mutual fund on every major exchange in the world. So this program has the potential to be much, much bigger than I thought. Now, I don't know if there'd be a lot of interest in it, but I think it's worth exploring. And so I plan to looking into that here in the new year to see if there's interest and what it would cost to put the website together and get some programmers who could get the data. And then at this point, I'm now just waiting on Morningstar to come back to me with a quote so we could look at pulling historical data so people could go back and model their customized screens to see which momentum algorithm would work best for a different security, for each different security they have, depending on what their goal is, whether they're traders, investors, money managers, whatever they're looking for. So I think that's pretty powerful, and I'm pretty excited about where that goes. And even if not, it's going to be a great tool for me to use for, as I mentioned, my macro clients. Now, it doesn't mean that I'm going to be putting, this is going to be becoming a trade show, or I'm going to put, trading advice. Please don't expect that to happen. But I wanted you to see, for all those that said, hey, Steve, you're always wrong. Well, when you see how powerful this program is, if you could see from the back end, you see that its probabilities of being right are high. And it's very cool, very cool. All right, so going into next year, some of our plans are to start adding some interviews. So in between the regular macro shows is I've thought about doing some short interviews, and I've already got commitments from the dollar milkshake man himself, Brent Johnson. Dr. Lacey Hunt has also agreed to come on the show. My friend Peter Bookvar of the Book Bar Report, he's a great macro guy, very data driven. He's agreed to come on the show. And of course, one of my big someone I'm a big fan of, and you are, Jeff Snyder. I don't even have to ask him because I know we've done enough interviews that he'll come on the show. And there's some other people that I have in mind. Now, many of you have asked, why don't you do more interviews? Because it's a lot of work. It takes a lot of time to actually go through someone's research and ask them questions that are on target. Some of the best interviews that I've done for people are those who actually understood, my research and were fans of the show and didn't just grab headlines and talk to me about them, but actually kind of dug into my research and really asked some good questions. Now, if you really want me to do more interviews and you're willing to go through someone's data and help write questions and give me summaries of what to talk to them about for maybe 15, 20-minute interviews, I'm all ears and I welcome your help. But I just only have so much time to do that. So part of this will be me picking people who I'm familiar with their content and their views so we can talk about. Another thing that's coming is I think I'm going to do more educational pieces, like we've done a couple of them with the insolvency and the liquidity show. We did the QE show. And I think periodically I'm going to do a couple of one-off shows as educational pieces. And then maybe even some macro framework shows, maybe some short shows where we're not just going through data, but I'm kind of giving you an overall view of where I think things are going. So one of my goals is to put more time into building the show and hopefully making it more of what you want. All right, so now I want to address a conspiracy theory about the macro show and this thing called portfolio shield, and why does it differ so much from your macro thesis, and why don't you ever talk about it on the show? All right, so about 6 years or so ago, I sought out to develop a strategy because I did not like how asset allocation worked. I didn't like how risk parity worked. I didn't like how volatility control products work. I thought they had issues. They work in some instances, but they don't work in all. And from a business perspective, if you look at how most Americans are invested, they're long the U.S. equity market. And if you look at what the industry is selling them, they're selling them long equity strategies. And so I said, how can I actually improve upon what's been around for strategies that have been around for decades in some cases? Asset allocation has been around a long time. And so I built Portfolio Shield as a long equity strategy with a hedge. Has nothing to do specifically with the macro show, has nothing to do with my macro views. I just built a better mousetrap. In fact, it came out so much better than I thought. Hey, maybe I could market this thing. And so I thought large insurance companies would be really great. And in fact, I've had meetings with a few of them. They've all laughed at me and said, you're ridiculous. This isn't going to work. But it does work. I've been running the program for 5 years, clients in it for 5 years. It's worked exactly as I designed it to do. So maybe you work for a large insurance company, or maybe you work for an investment bank and you know people in the product development division, and you've gone to the website and you say, hey, this thing's pretty cool, and you want to help me make it into something and be a part of it. Well, reach out to me, let me know. I've got the door slammed in my face several times, but all I can tell you is the strategy is far better than anything else on the market today. So if someone was long equities and they're in asset allocation or in one of these other strategies or an annuity or something like that, this as an engine is far, far better. What I haven't found is someone who actually either could get me to someone who would look at this and take it seriously, or someone who is in that position to do that. So again, if you're at a bank, an investment bank, an insurance company, and you can open some doors and you want to help out do that, I'd appreciate it. But as far as any conspiracy theories go about it, there are none. Think of it from a business perspective as you just realize who's out there in the market and what they're comfortable with and what they understand. And you built a product that can actually meet the needs of many, many Americans. That's what I created. And so this year, because I've gotten some no's and door slammed in my face, one of my goals for this year is to work on social media advertising for it and just build it out, kind of the normal way. Now, the last conspiracy theory, and we can't really end the show without talking about this, is, does Steve actually live and work in his parents' basement? And the answer is no, I don't. If you go to my website, you can actually find my office address and Google map it and see that my office is in one of the oldest retirement communities in the country, here in a town called Bakersfield in California. My office was indeed built in the 70s. The wood paneling was actually put in by a real carpenter. It's not just slapped over drywall. It actually goes all the way to the studs. The carpenter who put this in did all custom wood work in here. And I don't own the building. I'm just a tenant. And so my view is I could pay to rip it all out, re-drywall, and repaint the whole thing. where I could just appreciate the fine craftsmanship that this carpenter put in, 30 some odd years ago, or well, more than that now, I'm probably closer to 50 years ago. And so, but if I ever do take it down, I'll be sure to cut it up and sell pieces of wood paneling. But again, I don't own the building. And so as far as I'm concerned, it's not worth investing in. But I don't live here. This isn't my parents' home. It's just my office. And this happens to be the only room. Actually, there's 2 rooms with wood paneling, but this one has 3 doors. That door back there that you see, that one, there's actually 3 of them. I know, when they're closed, I don't know how to get out. Anyways, thanks for being fans. Thanks for supporting the show. And I'll look forward to a great new year with you. And we'll hopefully improve upon the show. And that's always my goal, is what can we do better? What can I do better as a person, a husband, father, money manager, and of course, for you as your bond king, which I suspect, I'll add this, if you watch the end, I have a prediction. In 2021, we'll be adopting a new crown. Some other kingdom we're going to take over. So again, thanks for being fans, and I look forward to seeing you on the next macro show. I'm Steven Van Metre. Bye now. The content of this video is provided as educational information only and is not intended to provide investment or other advice. This material is not to be construed as a recommendation or solicitation to buy or sell a security, financial product, instrument, or to participate in any particular trading strategy. This video was prepared by Steven Van Metre on personal capacity. The opinions expressed in this video are that of my own and do not reflect the view of Atlas Financial Advisors Inc. or Steven Van Metre Financial.